All right. Yesterday I did a video that was an urgent update called Bounce or Die, and I was telling you how it's very important to let the chart do all the talking. And yesterday we were getting a lot of money rotating out of stocks and into the bond market, and I gave you a very clear risk level right here at SPY 438, and I told you if we break down below that, we were likely going to 527, and I drew this arrow from the lower high rejection. So this is an intraday update. The market's only been open for a little bit over 30 minutes now, and we're very close to that price target. But I do want to caution you against what's called shorting the hold. Once we get to 527, do not be surprised if we do bounce back up to retest that breakdown at 538. When you get a critical breakdown, the market loves to come back and test that breakdown. And then if the market wants to remain bearish after that breakdown retest, then we will continue lower, or the bulls will take back control and we'll have seen a bottom and we'll continue back into a bull market. So I have all of these arrows on the chart, and all I want you to do is practice letting the chart do all of the talking with no bias, move like water, and follow price action. This is a very volatile market, and now is the best time to understand the importance of moving like water. We knew exactly where to get risk off. We knew exactly where to lock profits on any dip buys we had, and then any remaining long trades you need to manage risk on now that we're in a risk off territory. Knowing that if you're going to take long trades from this support zone, that is your risk. That is where you define your risk, and it is very easy to do this. All you need to do is use the long tool on TradingView, and if you are going to trade for that retest, you need to make sure your risk is more than a 1.5 reward to 1 risk. Something like this, where if you buy near 527, you can easily get a 1.7 reward down to the next support, and you can adjust the risk and reward however fits your risk management. So if you are buying falling knives, you need to make sure the reward to the upside is going to be more than the risk to the downside. Otherwise, you will never be a profitable trader. So I'm not saying you can't buy dips at support. There may be a great buying dip opportunity down here, and maybe even it's a market bottom. However, we are going to move like water and let price do all the talking. There's no reason to predict or guess where the market is going to go when we can simply react to price. And that is why I'm going to continue to give you the bull and bear scenarios of exactly where you should be managing risk. So right now, today, that critical risk level is going to be down there right around SPY 527, and we are risk off below 538. So if you're taking long trades, you are likely locking profits at the retest right around 537 to 538. There's no reason to just hope you caught a bottom and hope we go to all-time highs. That is the definition of a risk-off market. So I'm going to walk you through this a lot, and I think these intraday updates are helping because you can see these things unfolding before the market closes, and then it gives you some time to watch these episodes and adjust to your trade plan. Or if you don't have a trade plan, that is one of the warnings I always tell traders, is always have a trade plan and always be prepared to manage risk. So today, focus up on SPY 527. If that level holds and we start to bounce, do not be surprised if we do bounce to 538 before we decide if we're going to go lower or continue higher. 527 is critical and 538 is critical, and I'm viewing this as risk off while we're below 538, which means there's no reason to expect a bull trend anymore. If we regain the bull trend, we will see it in price and we will get back above 538, and that is how you let price do all the talking. So then quickly, I want to jump over to TLT, which is the 20-year treasury, and you can clearly see we are getting high volume buying in bonds yesterday, and we're getting a bull breakout today. And this is simply just fear and reaction to any point that the market could be slowing down and a recession could be near. A lot of big money movers are going to reduce their exposure to equities and increase their exposure to bonds, and that is why you are seeing stocks selling off and bonds going up. This does not guarantee there will be a recession. This does not guarantee a recession is near. All this is big money positioning properly so that they don't get caught offsides if we head into a recession, where bonds typically perform far better than equities during those periods. So this is a very technical move. This makes a lot of sense if you understand what's going on in the bond market and you look at the possibility for rate cuts in September. So there is no surprise here, and that is why it is objective reaction to price. Anybody buying bonds is not doing the wrong thing. This is probably a very good idea, especially if you're a longer term investor and looking for protection against a recession. So everything makes perfect sense. Do not be caught off guard. If we jump over to the triple Qs, we're doing the same thing that was expected, which was the breakdown below 455 to 456 was likely going to mean we went down towards 436. Now, if we could find support at 446, again, it is possible we do bounce higher towards the breakdown. But right now, I would go ahead and assume the possibility is that we bounce off of 436 446, come back up to retest the breakdown at 456, and then from there we'll see if the bulls take back control or if the bears are going to be strong and put in that lower high and then continue to push lower. So you have every single critical level you need to pay attention to right here on the chart. Now all you need to do is let price do all the talking and have a trade plan prepared for both scenarios. I'm giving intraday updates in the Stock Channel Discord server, and I'm going to help you navigate this volatility, and this is where all of the money is going to be made, because during volatile markets you can have amazing trade setups and you could take advantage of lots of volatility, especially as a day trader. So now is a great time to be a day trader. Now is a great time to be very focused and not just panicking, because if you're panicking, it likely means you had no plan that was prepared for this. And if you had no plan that was prepared for this, unfortunately, that is not how you're ever going to be a profitable trader anyway. In order to be a profitable trader, you really need to focus on having a trade plan and always have your risk management levels in that trade plan, so you know where your losses are going to be relative to your rewards, and always make sure your rewards are larger than your losses. That is the only way to truly be a profitable trader over the long term. So if you got caught off guards during this pullback and you didn't have a plan for if the pullback went deeper, just learn from it. It doesn't need to destroy your trading career, but unfortunately it does for a lot of those people that just continue to buy call options during a pullback. Options trading is very dangerous and there's a lot of risk associated with it. You're much better off learning how to trade shares and proving you could be profitable. And then if you still think you want to go trade options, then at that point, at least you proved you can at least be profitable with shares. So focus on the triple Qs and SPY right now. Those are the major indices. I do have more updates on IWM and the Dow Jones in the Discord server, but right now I didn't want to make this video too long, especially as an intraday video. I wanted you to pay attention to the critical risk levels and be prepared for both scenarios. Remember, risk off does not mean the market can't go higher, and volatility does work in both directions. So do not just blindly think that shorting the whole is the best trade. It is very possible we bounce and retest these breakdowns, and that is still a very decent volatile move to the upside when that does occur. So follow these arrows around the critical levels that I gave you on SPY and the triple Qs and let them guide your trade plan. And as long as you're prepared for both scenarios, then all you need to do is let the price action do all the talking. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.